silver spot price in fiat US dollar terms got cut down by over $2 an ounce within a 24-hour trading window this past Wednesday into Thursday, as price volatility picked up in many major financial and commodity markets worldwide. Later in this week's Bullion Market Update, we'll look at how far this current silver spot price fall may go, and we'll also look at the longer-term bullion bull market drivers unshaken from recent spot price weakness. Current overall U.S. financial market players are expecting Fiat Federal Reserve rate cuts to commence just over a month from now. Bloomberg is now stating the Fed is likely to signal next week on its intention to begin rate cuts in September. Here's a look at how markets expect the future rate cuts based on their derivative bets at the moment. Historically, gold and silver spot prices tend to perform very well once rate cut cycles commence and play out. You can see 3 rate cut cycles versus gold in the 21st century here. As for silver, the percentage returns that it's achieved in the last 3 rate cut cycles in this 21st century call for the spot price to eventually zoom in due time. Big physical silver and precious metals news out of India this week as they slashed import duties on all 4 major precious metals, which is already spurring physical demand locally in India.
Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%.
This is the lowest import tax on gold and precious metals we've seen for over a decade in India. The move has already driven local gold bullion premiums positive, and it's also undercut the UAE silver throughput discount at least for the next 2 to 3 years, and thus further importation pressure will likely return to record low London silver and diminished gold holdings. Not only have we seen demand in India pick up, silver bullion imports into China on price weakness last month, June 2024, spurred large silver deliveries on the SGE. Surely similar will be occurring now with silver's recent spot price sell-off. Further coverage on the week from India is here.
Well, I'm looking at precious metal prices because, yes, India has had that very sharp correction in prices, and that is because the duty has been slashed from 15% to 6% now. You also are now looking at the international prices also coming down. So when you look at the international markets, the gold has come off its all-time high of 2470 to almost 2370 and counting on the lower side right now. So this has been a big correction. The strength in US dollar index really seemed to be weighing, and also the fact that the regional equity markets are selling off. The base metal prices have been declining. Silver shot down by nearly 3% overnight, and that seems to be weighing on gold as well. So it has been a very sharp correction on the lower side here. If you look at the gold prices right now, we're trading at a 4-week lows. Gold in the international markets was trading at a 2-week lows as well. Silver is now trading at 2.5-month lows as well.
This week, the so-called richest man in the world tweeted this warning to his followers on Twitter/X. Suggesting that fiat US dollar destruction is leading us to eventual hyperinflation and violence. Over 53 million people viewed his message on the website. These are the kinds of modern-day differences we see in this 2020's bullion bull market versus bullion bull markets of the past. The speed of information and communication on the internet now, with smartphones, it's totally being underestimated. An eventual widespread confidence breaking point is out there, and it's going to call into question even the very stores of value many so-called money these days, likely driving many more investors into the precious metals markets as the years unfold. Stick around. On the other side of this break, we look at the longer-term issues facing the USA with an insightful piece on just how unprecedented the current fiscal situation is that we are collectively facing ahead. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates, and be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Want to win 500 Silver Tree of Life coins from SD Bullion? Enter and you could be the next lucky receiver of a phone call like this.
Hello. Hi, Stuart. This is Dr. Tyler Wall, president and founder of SD Bullion. And I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of 2023 Silver Eagles.
Oh, my God. You got to tell my wife this, because she's not going to believe it. Honey, Okay, doctor, let her know.
Yeah, this is Dr. Tyler Wall. I just let you know that you guys won the Monster Box of 2023 Silver Eagles giveaway from SD Bullion.
No way.
Yeah.
She would never believe me if I told her that. I'm online all day long with your website looking for deals.
Wow, that's awesome.
Yeah, your site's fabulous and your company's fabulous.
Well, I appreciate that feedback. And we'll be following up with you shortly on getting your Monster Box shipped to you. Congratulations again.
Thank you, doctor.
So click the link below because the next big winner could be you.
The spot silver and gold markets sold off on the week. The spot silver price finished just below 28 an ounce bid, while the spot gold price closed the week at just under 2,400 an ounce bid. The relative pronounced weakness in spot silver versus gold caused the spot gold-silver ratio to rise to close the week at 85. The current 200-day moving average for spot silver is near 26 an ounce. It's going to be interesting to see if spot silver prices see more downside weakness early next week before the Fed begins talking rate cut timelines in public. We've seen major sell-offs like this in spot silver many times before in bullion bull markets. Look back at the start of 2011 for something akin. Once completed, the spot silver price nearly doubled in the 3 months that followed that large spot price sell-off to start the year. Finally, we close this week with a sobering reminder of what we are collectively facing in the USA. An over $175 trillion hard debt and unfunded liability problem that has not yet been admitted unpayable by our so-called leaders that be. Balaji posted the following sobering info on his Substack this week, and it's worth a brief review, as precious metal spot price weakness can cloud judgments on the short term. He writes, quote, "We're headed for something far worse than 2008. As Elon, Dalio, and Jamie Dimon all recognize, the Western world is headed for a sovereign debt crisis. Just like the establishment was hiding the president's senility, they're hiding also the true state of the economy. But let's calibrate with 10 charts below, and then you can judge for yourself. Fiat financial authorities have been loaning out way more in funds in 2023, for instance, than they were in the 2008 global financial crisis. The US government is piling on another $1 trillion in debt every 100 days. It's currently borrowing at the rate it was during the COVID crisis peak. With interest rates near 5% still, that means interest on the debt is soon to blow beyond the massive defense spending in the United States. In just the last 4 years, the fiat US dollar has admittedly been devalued by over 25%, and I'd argue it's likely more as ongoing price inflation is almost always underreported. China is increasingly dumping its US Treasury holdings as it has since the mid-2010s. Meanwhile, the BRICS collectively are piling into gold bullion reserves over bonds. China's bilateral trade deals using the fiat Chinese yuan are now larger than US dollar deals globally on net. In other words, China is now the majority number one trade partner of the world, not the United States. The Russian GDP has recently eclipsed Japan's, regardless of the US and Western sanctions. There is no end in sight for Western world debt levels forecasted to balloon outward, and as I would suggest, we're definitely heading into an eventual debt crisis as we go on this clip. In February 2024, the US government admitted the net present value of what's collectively owed is over $175 trillion at the moment. In other words, that's not getting paid off in real value terms. AI, or artificial intelligence, is not going to solve this situation, as the supposed Mag 7 bubble is only a collective paltry 15 trillion combined at the moment. The bottom line is more fiat currency devaluations leading into an eventual debt and unfunded liability crisis, especially in the Western world, with the USA being the largest debtor of the entire bunch. Global central banks know this, and they are backing out of the theater before the fire becomes apparent to everyone. My hope is many of you are taking advantage of this latest spot price weakness and adding to prudent bullion positions, as the central banks have been doing in record size the last near 3 years of time. That's going to be all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.